Hi, this is this week's video analysis for Orbex.com. We're going to be covering the dollar index plus the FX majors, breaking down time frames, highlighting basically what chart formations we're seeing this week and where we're looking for the FX majors to go. So as always, we're going to start off with the dollar index daily chart. Here we believe we've finished an Elliott wave bullish count. We've then had a choppy free wave corrective move to the downside, and then likewise a choppy free wave corrective move to the upside. We have got a topping formation. We've got an evening star pattern, a free candle formation at the top. This does sometimes highlight the end of a trend. We've obviously seen some quite aggressive turnarounds in euro dollar, sterling dollar. We're going to basically reflect this dollar bias back onto those currency pairs. So euro dollar, over the long term, and we keep on calling it, it's reverse wave formation as far as Elliott wave is concerned to the dollar index. So we've got a 5-wave count to the downside. We've then got choppy mixed price action really for how many weeks now? Let's have a look. If I can get my cursor to work. About 22 weeks. So it's now looking like we're going to form a double bottom formation, or levels close to 113, the figure of finding buyers. What we still like about this is an AB equals CD formation now takes the pair up to 118.10. Our bespoke resistance is at 118.40. So again, room for a next corrective choppy free wave pattern to the upside. If we break down into shorter time frames, just going to show the daily chart here and how complex we believe this move is. So this is the ABC and then down, and these are inside waves basically for what we believe is now the BC leg. So A to B, B to C, and then up in C to D. Decent candle formation from Thursday. Rallies got sold into. We've got Marabuzo level, which is the midpoint from open and close, around about 113.60. And if we just look at these last sort of 5-6 candles, we can see that spikes down towards that level, spikes up towards that level, have found both buyers and sellers, making it quite pivotal. So 113.60 being an important level going into next week. If we break down to the 2-hour chart, and again, this was that impulsive move to the upside that formed that bullish engulfing candle on the daily chart. We've now seen a corrective move to the downside. Obviously, we're highlighting 113.60 again. 113.58 is a trendline support, possible reverse head and shoulders. So left shoulder, head, potential right shoulder. We've also got a 61.8% pullback level, Fibonacci pullback level of that first rally at 113.61. So scope for some downside movement at the beginning of the week, but again, we're looking for it to be limited. Obviously, to confirm a reverse head and shoulders formation, we're going to have to break through this trend of higher highs coming in around about 114.60. So our preferred trade, obviously, at the beginning of next week is to buy dips around about 113.60. If we go to cable, and again, we're looking on the weekly chart for this AB, CD corrective move to the upside. If we break down to this time frame, again, reasons not to really sort of buy into the high trade. I don't think that the sell-off or the correction lower in cable is going to be very strong again on Monday. We've got a 38.2% pullback level of the last rally coming in at 129.09. We've got bespoke support coming in at 129.10. If we just move to the side, we can see a previous support level here coming in at 129.20. So I think limited corrective movement, again, maybe early on Monday or even on the Sunday open. But we're definitely looking to buy into dips next week for a more aggressive move to the upside for sterling dollar. Dollar Swiss, again, it's not going with the flow, if you like, of the dollar index, but we do have some interesting chart formations now. We got a bearish evening doji star pattern on the 4-hour chart from last week's high. We then broke the trend of higher lows, but that dip was bought into at 99.68, and we've moved and corrected higher. Now, similar, or the opposite, I should say, of euro dollar, is that we're expecting rallies to be sold into. What's interesting here is that on the intraday chart we've got what we call a DMARC 13 count, and that often indicates the end of a trend. That is close to the 61.8% pullback level. Really, for a confirmation of wave counts, we need to see a break of 99.68. However, what we've also got here is what we call confluence areas. So the 161.8% extension level, which is located at excuse me 98.90, lines up with our bespoke support at 98.91. Furthermore, the 261.8% extension level, which is 97.62, lines up with the daily Ishimoku cloud. So we've got reasons to stall bounce at both of those quite dominant Fibonacci levels. So we're looking for limited buying in dollar Swiss at the beginning of next week. Obviously, this call gets taken off, if you like, if we see a breach of the previous high, which is coming in at 1.0095, because those wave counts will then be irrelevant. Dollar yen. Now, we warned last week that we thought that even though we've got an evening doji star formation, which sometimes highlights the top of a trend on the weekly chart, when we saw this dip bar and we saw some divergence on the intraday chart, and we called for a scope for a higher correction is probably how we should put it. Again, on this daily chart, we've got a 12 plus, so that's a DMARC 12 plus. So it's highlighting that basically there is still scope for a higher correction here, but again, it should be limited. I think that Monday of this week, we're probably going to see another positive day in dollar yen, but then that's probably going to be it. I doubt it if we're going to see a breach of this high again at 114.53. What we like about this, wave pattern projection, is that we've got the 161.8% extension level at 109.40, and we've got our bespoke support at 109.60. If we break down to a shorter time frame, this highlights the divergence we were talking about last week. 5 wave count, not the prettiest wave count to the downside, and then this input, and it has to be said, quite an impulsive recovery in dollar yen. Seeing a confluence area, so we've got a 127.2% extension of this rally at 113.93, and we've got a 78.6% pullback of this decline at 113.87. So that sort of 6 pip wide confluence area, I think is looking quite attractive for a selling opportunity in dollar yen next week. Like I said, if we do move higher on Monday, then the likelihood is that we will complete a dollar yen daily DMARC 13, and like I said, they do sometimes highlight the top of a trend. So scope for buying, mild buying, I think, to sell into. Dollar CAD, again, quite like this. The Fibonacci confluence areas are sort of quite decent. 129.74 is near a previous swing low. We still think we're in a ending wedge pattern. A decent reversal to the upside after an impulsive move lower. Again, the scope for a bit more of an upside correction with the intraday chart only posting a 12 plus as far as DMARC is concerned. So I think sort of 131.40, 131.50 is going to be a decent sort of topside area at the beginning of next week. Aussie dollar. Bullish outside day, and managed to have quite a decent projection from that bullish outside day after 3 days of consolidation, but a decent move to the upside. I just want to go to the intraday chart first here and highlight something. Bespoke resistance at 72.71, 261.8% extension at 72.86. However,
this resistance area isn't that strong, and in fact we've got a 423.6% extension at 74.49. Commodity currencies have a tendency to overextend and run to this Fibonacci level. So I think the scope to get up towards here, and the reason why I'm highlighting that is if I go back to the daily chart, I've got support here. Really, they've got pretty weak resistance here and strong resistance up here at 74.30, which lines up pretty much with that 4-hour 423.6% extension level. So like I said, bullish outside day, some bullish divergence. Bespoke support going into next week, 71.25, dip buying opportunity perhaps for the next move to the upside, and then I'd expect probably quite a prolonged period of consolidation to match this stagnated price action going back to sort of July, August of this year. Euro sterling, we got the retest of the general breakout at 89.12. We've now seen a bearish outside candle posted on the weekly chart. It's a good continuation candle formation. It should lead to further losses. If we go to the 4-hour chart, that's that impulsive move to the downside. What we like here is there is scope for a retest of this trendline break. That comes in at 88.48. Bespoke resistance at 88.35. Again, a decent zone, we believe, to sort of get short at the beginning of next week. Stops placed around about this level. Going back to the higher time frame, this, if Elliott wave is to be believed, or this Elliott wave count is to believe, if this is 1, 2, we should now see an impulsive move to the downside with 81.95 looking quite attractive. So what I'm trying to say is selling into mild corrections at the beginning of next week does offer quite decent risk reward if you're looking for a longer term picture in euro sterling. Euro yen, I'm just going to break the time frames down here a little bit. Weekly expanding wedge has a long term bias to break to the downside. If we go to the monthly chart, you can see a Marabuzo, or a very strong bearish engulfing candle here with levels up towards the Marabuzo, continually finding sellers. So I don't believe that the long-term picture has flipped to the upside in euro yen, and I think we're going to see some pretty choppy price action next week. Try to buy on dips late at the latter end of last week. It didn't happen. We've now got support at 128.54. But I think quite interesting is the fact that we've got bespoke resistance at 129.47. That lines up with an ABCD corrective formation, and DMARC, going back to DMARC again, is posting a 12 plus on the intraday time frame. So yes, I think the scope for further upside pressure at the beginning of the week, but it could also be limited. And what we've also got to remember as well, just to wrap this this video presentation up, is that the long-term picture, we must remember in the back of our head for euro dollar, is still to the downside. We still believe that move to the upside that we're in now, this ABCD formation, is corrective, but you know, it could be ongoing for the next 3, 4, 5 weeks. Okay, I hope you've enjoyed the video analysis. Like I said to you, this video report is brought to you for Orbex.com, and we hope to speak to you again in the very near future. Thank you.